In today's episode, we're diving deep into some of the more advanced concepts of Bitcoin, things you might have heard about but want to better understand how Bitcoin is shaping the future of finance and technology. We'll cover 5 key topics: the Lightning Network and how it improves Bitcoin scalability, the Taproot upgrade that enhances both privacy and smart contracts, Bitcoin's growing role in the world of decentralized finance, the forks that have shaped Bitcoin's development, and finally the environmental impact of Bitcoin mining and some exciting new ways miners are addressing those concerns. So let's get started. The Lightning Network is Bitcoin's second layer solution designed to enhance scalability. It's an off-chain system where transactions between two parties are conducting using payment channels. Once those transactions are complete, the final balances are settled back on the Bitcoin blockchain. This significantly reduces the load on the main network, allowing for instant, low-cost microtransactions. It's a game changer for Bitcoin, especially for small everyday purchases like buying a cup of coffee. But Lightning isn't the only Bitcoin scaling solution out there. We also have a project called Stacks, which is a newer layer 2 protocol that introduces smart contract capabilities to Bitcoin. Unlike Ethereum, where smart contracts are traditionally written in Solidity and executed on the Ethereum virtual machine, the denominated EVMs, Stacks builds on Bitcoin's base layer. It offers transaction finality on the secure Bitcoin network while providing advanced smart contract functionality, a big leap forward for the Bitcoin ecosystem. Bitcoin is certainly proving it can evolve and adapt to new use cases. Next up is Bitcoin's latest protocol upgrade, Taproot, which was activated in 2021. Now, Taproot is one of the most significant improvements to the Bitcoin network as it enhances both privacy and efficiency. Taproot uses something called sure signatures, which makes complex transactions look just like any other transaction on the blockchain, improving privacy. Additionally, Taproot introduces new possibilities for smart contracts on Bitcoin, allowing more sophisticated conditions to be written into transactions. This upgrade also reduces transaction costs and storage requirements, making Bitcoin more efficient overall. Bitcoin's integration into the decentralized finance space, DeFi, is another game changer. Traditionally, Bitcoin has been seen as a store of value, but now it's also becoming a key player in DeFi ecosystems. Now, one way this is being achieved is through Wrapped Bitcoin, or WBTC, which represents Bitcoin on the Ethereum blockchain. WBTC allows Bitcoin holders to access DeFi services like lending, borrowing, and yield farming. Essentially, you can use Bitcoin as collateral to earn interest or take out loans without needing to sell your Bitcoin. This opens up a whole new world for Bitcoin users by making it compatible with smart contracts and decentralized apps on other blockchains. Now, Bitcoin forks happen when there's a split in the blockchain due to differing views on how the network should evolve. Hard forks create entirely new versions of Bitcoin, such as Bitcoin Cash or BCH, or Bitcoin Satoshi Vision or BSV for short, while soft forks are backward compatible updates that allow the network to function seamlessly. A well-known example is Bitcoin Cash, which merged with promises of better scalability and larger block sizes, but despite the initial hype, it never really gained significant traction and is now rapidly declining in value. Bitcoin Cash, along with other forks, has failed to replace the original Bitcoin. Now, this brings us to a crucial point for investors. Forks are often seen as alternative investments, but in reality, they are almost always failure attempts to supersede or replace Bitcoin's dominance. Investors should not be distracted by these alternative forks, as history has shown that they rarely maintain value or market prominence. If you're looking to safeguard your investments, the original Bitcoin network remains the most secure and widely trusted option. Stick to Bitcoin, the one that it started all, rather than risk seeing your investments dwindle with less proven forks. That's the key message. Bitcoin mining is often criticized for its environmental impact, but the situation is evolving. Yes, mining is energy intensive, but miners are increasingly turning to renewable and surplus energy sources. For instance, in some areas with abundant hydropower, solar and wind energy, miners can access electricity at a fraction of the cost or even at near zero rates when energy is otherwise wasted. Some miners are now tapping into wasted energy sources like methane emissions, which would otherwise be released into the atmosphere. By using this waste energy, they can power mining operations and reduce environmental harm. One great example is Marathon Digital Holdings, one of the largest Bitcoin miners in the world. Marathon is exploring initiatives to power their operations through stranded and wasted energy sources, reducing the carbon footprint of mining activities. Plus, some miners are now even capturing the heat generated from mining hardware and repurposing it for useful applications like heating buildings and residential homes. To wrap up this episode, Bitcoin has proven time and time again to be the most secure and trusted digital asset in the world. While forks like Bitcoin Cash and Bitcoin Satoshi Vision have tried to claim their share of the spotlight, they've largely failed to deliver on their promises. These alternative forks are not replacements for Bitcoin, and more often than not, they fade into obscurity, leaving investors with significant losses. So as an investor, it's essential to avoid getting caught up in the noise around these forks. The original Bitcoin network continues to grow and improve, with groundbreaking solutions like the Lightning Network enhancing scalability and making Bitcoin more practical for everyday use. The lesson learned here is simple: stick with Bitcoin. It's the one that stood the test of time, and with continued innovations, it remains your best bet for long-term growth and stability in the crypto space. So stay informed, invest wisely, and don't be distracted by failed forks that can only lead to lost opportunities. Now, hopefully you've enjoyed today's episode. If you have, please subscribe to this channel and hit the like button, as I regularly post some high quality, some rather interesting videos to you investors out there. So until next time.